I got out really quick because it wasn't acting well, but I was expecting a follow through down to about here. Didn't get it. When we got this failed breakdown, I was like, oh, that's it. And I actually went long, and then I got stopped out in here, and I left it alone for the rest of the week because this is just too much. I'm going to talk about how much cleaner the NQ is. Look at, this was very neat, very pretty. Then this flush broke everything and didn't follow through. Rally, flush, chop, up, back test, push. This is difficult to trade. I don't know how many of you guys did, but hopefully better than me. NQ, same thing. Not quite to the 50-day, but really pretty close there. And that's very interesting. And when we see this showing up a few more times, I think you'll see this is probably not a coincidence. This is much cleaner. And I emphasize here, excuse me, still fighting this stupid cough. Much cleaner. NQ is and has been the technical leader for a couple of years now. It took a break from about October, maybe November of last year till right before April, right before everything went sideways with Iran. Was clearly the technical leader. And then when we started ripping back, it retook the leadership mantle. By that, I mean, A, yes, it's going up faster. B, follow it for Qs. ES is following NQ's lead in terms of like, are we going to hold support? Are we going to do some things like that? We had the flush, the bounce, and then we didn't have to chop below. This is you can call it a double bottom or a higher low or something like that. But once we couldn't push below here and kind of recapture this level, this is where you really should be thinking about getting long. Okay, broke. Okay, if you want to be shorting a break or something like that, okay, you're stopped. We can't make a new low. And one of the things I want to highlight, if you take one thing away from this meeting, this is bull market action. This is a bull market. We're ripping back. We have all the reasons in the world to sell. We break a substantial and tested and confirmed technical level and get no follow through. And then as soon as we can't do it, we're back off to the races. And this is before the open. The NASDAQ is up, okay, again, my screen says 800 points. It's not 800 because of the roll, but it's somewhere around, 300 or 400. So we're 30,400. Yeah, we're way up here. This is bull market action for everyone who's worried and looking for the market to just roll over and die. You're early. You're early. So I'm putting it back, and my bias is back to don't fight. I say it a little softly, but that's what we're saying. And this is important as well. This is not as clean a level. This is the small caps, but this is clearly the highs here. It held there, and then it held here. And look, we go right back to old highs in, what's this, 2-3 days? It's not ripping. Small caps are not running away. Oh, by the way, 50-day moving average. Do we believe in coincidences? So we're right back here. We're holding, and the RTY is up 48 again with a roll premium in there. I don't know how much. So, but we're off to the races. Keep this in mind. So that's equities. Switching to the dollar. Our big level is holding, but we're up against it. If you're thinking about shorting the dollar, might be the time. It's down a little bit. This is an index, so it shouldn't have the futures roll in it. I got it down 0.24, which is just about 24 basis points because it's almost exactly 100. So interesting. It's very hard to trade the dollar. I don't know if anyone's buying gold here on this. I would not. I don't want to get too distracted on this, so I'll just move on. This, I think, is important. I've talked about it for a couple of times. This is a replicate of the Bitcoin chart that broke a few weeks ago. You get this, rounding formation. Then you break below a pretty clear support level. And I'm looking much more at the volume profile than the stock chart. When we broke down there, we pushed right back. And the market had a rough day or two, not terrible. But we're back to this level, and it's 110. 110 is all you need to know on the ZN futures. Sorry, again, before the roll. I really want to see it accept back into this high volume area. As long as this continues to act as resistance, you got to be a little nervous. But this is the one area that I think I could be a little worried about this I don't want to call it a balloon, but the pop in the bull market. Short term, I'm just showing how clean this is. This is a much shorter term chart. The volume profile is only based on what's in frame. And so you can see we've got this high volume area and we cannot break out above it. Really would like to see that happen in the near future. That would take some concerns away. Again, this is just for consistency. Not a lot happening here, but this does look a consolidation at the highs. If they move higher. Right now they're going sideways. They have been. This is most of 2026 right here. Not a lot of movement, but it does look bullish. Overall view, that's what I'm emphasizing. Okay, must be described as a fail breakdown. We have a pretty significant, pretty clear, pretty tested level. It broke. There's our 50-day, and right back higher, and now we're pushing higher. Yet again, the market is set up for a down move, but fails to follow through lower. That's the takeaway. We can't follow through lower. People want to be putting shorts on. They call them hedges. They call them whatever. You're not getting paid for them right now. Just something to notice. This is NQ. Oh, nuts. Sorry, I messed it up with my cut and paste. That's the same chart twice. This is supposed to be the Qs, but that's the same chart twice. I'm sorry. That's just a little error on my part. Okay, switching. This is IWD ETF, Russell 1000 value, and I'm saying it's like an increasingly valuable tell for the markets. And I'm looking at this more and more. It's it's 1,000 stocks. It's great, but just how intact it is. Let's this is the S&P. Really looks dicey. Not dicey, but looks like it really wanted to test lower. This. Sorry, too far. This is right back. This looks healthy. Okay, yeah, little pullback. Of course, this is normal market action, and right back to the highs. Keep this one on your radar screen as a tell, and until this one looks, like distributive or topping or anything like that. This is a very important tell, and I have a hard time getting bearish in June in an election year, with a lot of things going on with this kind of chart formations. So this is very different. Russell 1000 growth, that's a 128 to 121. Yeah. That's a 5% pullback. And again, right to the 50-day. The high volume area served as support as well. We're back ripping higher. But this is not nearly as good as tell. It's still healthy. It's still fine. Everything looks all right. China, I got a little cute here. What is the opposite of consolidating at the highs? That's what I'm saying. U.S. futures are doing, U.S. equities are doing, and this is been consolidating near the lows for the better part of a few weeks here, but we're testing and below where we were back in March, and this is consolidating at the lows. It looks like we want to go lower here. This is not one I would want to be long. EEM, look at this. I'm not a big moving average guy. I'm not like I keep them on. I pay attention to them. I love the description of they're like your trail in a snow. They're much more useful for looking back and seeing where you've come from than telling you where you're going. But in this era of computers and everything stopping at the 50-day, it just understand what's working and use it. So. Breadth, this is further confirmation. This is where things were looking dicey on the chop this week. This doesn't look bad at all. And we have an update and we're right back to not old highs, but we're right back looking good again. And again, all of this is before tonight's action. And then here is the stay. So, this week, we were essentially flat on the week with a lot of volatility, a lot of range, but the markets, the NQ and ES were very close to unchanged on the week. And this is a whole hell of a lot of green. Okay, the big ones are getting some profit taking and pulling back. Sure, Microsoft down 6%, Apple, Google, Amazon. It seems like IGV and software names are getting hit again because of I can't remember what Anthropic renamed their software, but there's a lot of concerns about software. They're also expensive. But look at all of this. And if you're really thinking, the whole market's going to roll over and go down, hey, this is you're fighting a tough battle. So, okay, making a big switch here now to oil. Where is oil tonight? I'm not seeing. Let me take 2 seconds and look. Where is it? Wow, down to 80 and change. So yeah, okay, we're back. Oil is pulling back. I'm flat on this. I got stopped out over a week ago, and I still think this is a bullish formation, but the range is brutal to trade. If you can buy, or I say sell extremes, that's sell excessive expectations and sell excessive bearish sentiment at the opposite extremes. I think that's the better way to go. That's not how I typically trade, but it does seem to be working a little bit. I don't think. Well, all right, never mind. I'll take that back. 76 is definitely a level here. I don't know if we're going to test it in the next couple of days, but we're down right around here. It until we break and accept below 76, I'm calling this a bullish formation. Brent, I don't have a quote on Brent after hours, but I wonder where that is. I'm going to assume it's down somewhere near. And again, this F representative, but Brent's going to be getting hit if WTI is down $4. So, but also this is still a bullish formation. Watch for 46 on the ETF to see if it can hold there. Natural gas, just emphasizing the changing character. A lot less activity than oil in terms of crazy volatility, but very intact formation here, and still looks like it's very capable of moving higher. I think some of you have heard the fundamentals where 17% of global supply was taken out by Iran a couple of months ago, and U.S. can be a swing producer here, so natural gas could do well locally. I guess more towards the shoulder season. Gold made new lows. This volume area, I think, is pretty important. You can see how well it dovetails with this down to about 360 on the GLD ETF. It's just a better chart. I'm bullish on this longer term, but we're making new lows. We have a declining 50-day. Everything here is declining. Nice day, Friday. I guess this is Friday. But I'm not pushing it. I'll let this set up, take some time. And I do believe seasonally this does a lot better in like kind of the fourth quarter almost, especially if you look at last year. It took off right at the end of was this August, beginning of September, and chopped sideways for a good, 6 months in front of it. We're obviously not going sideways, but I wonder if we could have a similar seasonal pattern this year. I'm watching for it. Bitcoin, we rolled over a couple weeks ago. Now we're just chopping sideways again. Range is diminished, and I'm highlighting that it's the measure of risk appetite. That's how I'm looking at this. If this, really rolls over and goes down, I'll be, what's going on with risk appetite here that they want to sell Bitcoin. Oops, sorry. Energy looks okay. It's choppy. Valero, the refiners look pretty good. This is in the face of a pretty dramatic pullback in the oil price and before tonight. And yeah, it'll get hit tomorrow. But energy overall is constructive. Semis look great. Switching down here, software looks like hell. It just really does. And until people have that figured out, this could be a long road for software. Tech overall, obviously a combination of semis and software, so it looks a little bit more mixed. K-Web, I don't speak too much because it's more China than anything else. But the tech is still leadership, primarily semiconductors. And I don't want to fight them. Then this is just the last perspective I look at. These are all the non-sexy sectors or less sexy sectors, with healthcare like hanging out right at recent highs, financials making new highs, industrials right back to recent highs, and then even consumer, which has been a little beat up, really came back. I didn't come ripping back, but really had a pretty decent week. No complaints there. I own a small cap consumer stock that had a great week. I think it's up like 20%. Not quite, but had a good week. So I'll wrap it up there. It's late. There's things going on. I'll just touch on these very briefly. This is context. This one is the most important. We're out of this long-term range. And if anyone has any questions, please drop them in the chat. I'll see if I can look in YouTube. Marlon, if you see anything in YouTube, please let me know. Otherwise, we don't get too many questions, and I'll just wrap it up. I will say, the summaries in the back here, reverting to don't fight. You can't fight this. I did push it a little, trying to get short, thought the setup, there was a clean setup there. I looked back on it, kind of did a post-mortem, and like, yeah, that's what you're supposed to short. And I didn't chase it after we kind of started chopping back and forth. I'm like, all right, I'm leaving this alone. But if you're just listening in and you haven't looked through the charts, just read this last page and the first page where I try and highlight what we're doing. There's just a couple quick takeaways. It's a bull market. We can't follow through lower. Fight this tape at your peril. That's what I'm saying. We had a setup that I thought was coming together for a couple weeks to short those stocks, and it just, this is what you get, and this is what you get if you get long. This is very unfavorable risk reward being short. So, and that's ES, and this is NQ. So yeah, that's it. Gonna stop there. Again, any questions, please drop them in the chat. I'll give you just a few seconds to see if there's any there. Otherwise, we'll wrap it up and just hope you guys have a very good week. So yeah, thanks very much. Have a good week.